So over to you, Terry, to welcome us today.
Okay, so hello everybody and welcome to today's webinar with multi-award-winning buyers agent Rich Harvey. We're going to discuss lockdown impacts and opportunities, a topic that's well tuned to the times we are in with so many of our cities and some of our regional areas currently or recently in lockdown. Everyone has questions about all that and what it means for real estate markets. And what we are seeing is that residential property is incredibly resilient, if not downright defiant, amid all the disruption. So to talk about all that and a whole lot more, we have today multi-award-winning buyers agent and multimedia megastar Rich Harvey. Rich, welcome.
Thank you very much, Terry. Terry, which screen are you seeing, by the way? Just checking.
Look, I can see your first slide and a smaller image of your next slide, as well as the image of the person.
Sorry, I picked the wrong one. Sorry, I just got to go back. I've done it on the wrong screen. I'm trying to look at one screen and then see the other. So I'll have to go back to the other way. So sorry, give me 1 second, just 2 seconds. And I'll just try sharing again. And that's the one I want. Okay, are we good now? Is that the right one now?
It certainly looks pretty good to me. I'm seeing a full image on your first slide. Perfect. And the image of the person talking. There we go.
So that's great. Thank you so much, Terry, for the introduction. Just get the technical bits right. So thank you, Terry. Just a quick bit more background about myself. I've been the CEO and founder of Propertybuyer for coming up to 20 years in October. So I think we'll have to have a party to celebrate. We've purchased over 3,000 properties, and also I've served in voluntary positions to improve the ethics and standards throughout the buyer's agent industry. I'm also a fully qualified property investment advisor through PIPA. Today, Terry and I would like to do 3 simple things. We just want to take you through a quick discussion on the Australian property market and highlight some of the outstanding results and where there are opportunities and challenges. We're then going to focus toward the end a little bit more on Melbourne in particular, and then we'll just open it up for Q&A in the last 15 minutes. So certainly encourage you to participate through questions in the chat box as we go through, and if we don't get to them all, we'll certainly get to as many as we can at the end as well.
Yeah. And to answer Christian's question, yes, the event has been recorded, and I think it's intended, is it not, Rich,
yes,
that recording will be sent to everyone who's registered for the event?
Correct. Yes, we will be doing that at the end as well. So don't panic if you miss the slides and we go a little bit too quick, but there is a fair bit of data we just want to share with you in the initial couple of slides and then get into some discussion. So Terry, these are the latest auction results from last weekend. We saw certainly the lockdown has had an effect or tempered the number of auctions that there are. Normally we should be seeing auction numbers around about 800, even up to 1,000. In Sydney, and last weekend there was only 472 auctions with a clearance rate of 83%. Melbourne had quite a few more, obviously different level of restriction there, but that had a more muted rate of clearance at only 66%. Everything that goes to auction in Brisbane is selling quite quickly, but again, only 64% there. In Adelaide and Canberra, pretty high numbers as well. And if you look at compared to last year, even in last year, we were very much feeling the hangover effects of the 3-month lockdown quite significant. So we have an improvement on last year, but definitely COVID is tempering the number of buyers, vendors, I should say, that are putting their properties on the market. If you see the trend for Sydney over time, especially since January this year, we had a very, very strong spike, almost up to 90% in that February, March, early April phase. That was very much what I call a white hot market at the beginning of the year. That's around this area here. So, and then in Melbourne, the numbers have been a little bit more muted, sort of in the high to mid 70% ranges. That's what we've seen. And I think Melbourne's got a little bit more catching up to do. So potentially some more opportunities coming out of the Melbourne market. If we look at just particularly the regions in Melbourne, we can see here generally the mid 60% for most of the regions, from the inner south to the east, to the northeast and the southeast. All of the areas have had generally reasonable auction with clearance rates, but wouldn't say it's absolutely white hot like it was earlier in the year. Where are prices at, Terry? So I'll just cover this slide, then I'll hand over to you after this one. But you look at the current median house price and unit price for all the major capital cities. And Sydney's at 1.3 and a unit is at 750 compared to Melbourne, 974 for a house and 568 for an apartment. Brisbane, 632 and units at 398. So I study these figures on a regular basis, and it's just amazing how fast they've gone. And Terry, I'll just hand over to you on the next slide. You can just talk through perhaps the percentages and what's happening in both the city and some of the regional markets, please.
Yeah, I think there's two things that stand out. Firstly, the level of growth in the last 12 months, that's up until the beginning of this month. The latest figures from CoreLogic is extremely high in pretty much every market jurisdiction in the country, both capital city and regional. But I'm not sure whether the next slide will show this, Rich, but the growth to date in 2021 is even more stark. So if we could just go back to that previous slide, you can see that there are a number of jurisdictions around the country, Sydney, Hobart, Darwin, Canberra, and the regional markets of New South Wales and Tasmania, which are all up more than 20%. That's in the last 12 months. So if we could perhaps go to the next slide and look at what the quarterly figures are. This is in the 3 months to the end of July or the start of this month, August. You can see that many of the markets around the country have had at least 5% and as high as 8.7% in Sydney. Annualized, we're talking about growth rates well above 20%, in some cases above 30%. And then the following slide, Rich, shows the growth, I think, in the year to date. So in the first...
Sorry, I didn't quite get them all in, Terry. I didn't do quite the year to date ones. I've just done the annual and the quarterly, sorry.
Sure, okay. But we can certainly talk to that because the numbers are even more stark for when you just look at the what they call the year to date. The amount of growth in the markets around the country in the first 7 months of the year up until the end of July. So we're seeing some market jurisdictions have had actually more growth in the first 7 months of the year than they have in the last 12 months because there was actually some dipping, particularly in Melbourne. But in the first 7 months of the year, we've seen Sydney is up more than 20%, Canberra's up 18%, regional New South Wales 17%, regional Tasmania also 17%. So those are the sorts of the numbers and the volume of growth so far this year.
Just to summarise, Terry, what you're saying is that in that year to date, from January to August, the year to date figures are showing even higher numbers. I'll just go back one slide, even higher than what some of these 12-month figures are, which is incredible. It just shows the speed of growth in those first 4 months of the year was phenomenal.
And Melbourne's a case in point because Melbourne had some price decline in the early part of the last 12 months. That's going back into last year, but certainly this year, Melbourne, despite everything that's happened there, has had a big resurgence in price and starting to catch up with some of those other markets. But you can see on the figures on the screen just how widespread the growth is. Probably the only laggard is regional Western Australia. Everywhere else is incredibly strong. And this is the sort of market that we only see in Australia once every, say, 15 or 20 years. The last time we had a truly national property boom was right at the beginning of the century, 2001, 2 and 3, when pretty much everywhere around the country was showing big growth. But so 20 years ago since we had a market quite like this one.
So, Terry, I've just got a couple of slides now just on some individual locations in Sydney, Melbourne, Brisbane. So talk us through just some of the Sydney areas firstly to start with.
Yeah, so those earlier slides showed the generalised figures, one figure for Sydney, one figure for Brisbane, etc. And that disguises the fact that behind the scenes, there are individual locations that are doing a lot better and some that are doing not quite so well. But what we have on screen, some of the markets in Sydney that have done better than the average, in the Northern Beaches, always a very solid market, always seems to perform. When Sydney was in downturn, this was the market that seemed the most solid in resistance to the downturn. And now that the boom is back on again, certainly the Northern Beaches, some of those suburbs are up more than 30%, and other top-end locations, including some of the eastern suburbs, some of those very expensive markets with median prices above $3 million, for example, north of the harbour, growth 25, 27%, as high as 30% in Bondi Beach.
And remember that like Mossman median house price is around 3.5 million. So to get a 24% growth rate on an already extremely high median is quite remarkable.
Yeah.
So,
before we leave that okay. No, carry on. I was going to make the point that the level of growth that we're seeing in just one quarter in individual locations right around the country, there are examples of this. It's quite extraordinary. But let's keep moving for the slides.
This was just one about individual price points that I'm not sure what you wanted to talk about here.
Yeah, I think it just shows that the growth is happening across all price points, although perhaps in some of the lower priced areas of the Greater Sydney area, not quite as spectacular. It's interesting, isn't it? We're in times where 10, 11, 12% growth is not quite as strong as other areas. Normally we'd be saying, well, that's pretty good, that's a boom. So the locations out towards Penrith, down in the far southwest are showing double-digit growth and as high as, say, 20% in Rose Meadows. Some of those, perhaps what you might call the middle market areas of Sydney, locations with median prices maybe a little bit above $1 million, but certainly not the top end of the Sydney market. Some of those suburbs are also showing growth above 20%. So this outperformers right across the Sydney area and all sorts of different price points at the moment.
Perfect. And then we'll just move now to Melbourne.
Yeah, I think if I isolate, say, 3 locations that have been absolute outperformers at a time when everywhere in the nation appears to be exhibiting strong growth. One of those top 2 or 3 would be the Mornington Peninsula in the southern fringe of Melbourne, where there's been extraordinary growth in virtually every suburb in the peninsula. I think it's an expression of the trend I call the exodus to affordable lifestyle, where people are moving perhaps out of the central city in large numbers, not just moving to regional centres, but to lifestyle markets on the fringe of our capital city, perhaps the Central Coast north of Sydney is an example, the Southern Highlands just outside Sydney to the south is another, but certainly the Mornington Peninsula on the southern fringe of Melbourne offers a range of price points on a peninsula where there's water on 3 sides, and so a great lifestyle, and some of those suburbs are up more than 40%, which is extraordinary. And there's some other markets shown there. The Yarra Ranges, another sort of, you might argue, is another lifestyle market on the fringe of Melbourne that people are showing interest in, more of a hill change area. The Yarra Ranges, and then we've got a more inner city area, the Moreland local government area, the Brunswick suburbs, and nearby neighbours are also doing extremely well.
Excellent. And then let's head to the Sunshine State, to Brisbane.
Yeah, well, Brisbane is a market that hasn't done a lot for the past 10 years. It's been chugging along without showing spectacular growth. There's been no boom anytime in the last 10 years, but certainly the Brisbane market is definitely in the ascendancy right now. And you can see from some of the numbers on the screen, there's an enclave a little bit east of the Brisbane CBD, Balmoral, Bulimba, Hawthorn, Norman Park, etc. They're all up more than 20%. So some of the western suburbs, where the median prices are above $1 million, also up more than 20%. And then perhaps more middle ring areas in the north of Brisbane starting to show really good growth, like Northgate and Sandgate. And then the inner city suburbs, New Farm's probably the most expensive suburb in Brisbane, right on the edge of the Brisbane CBD. It's been showing good growth in recent years and up another 23% in the last 12 months. Hamilton, also very highly rated suburb, a little bit north of the Brisbane CBD, up 24%.
Brilliant. So we're seeing very strong prices right across the board. So I'll just pick up from here, Terry. And I think if you're wondering why prices are rising so rapidly, well, one of the reasons is the constriction in supply. And these are the latest figures from CoreLogic on listing volume. So on the left-hand side, we've got the number of new listings coming to the market, which is not too bad. It's still following a trend, which isn't too bad. Last year, we had a significant drop in number of new listings. That's the orange line. But if you look at the total number of listings, the actual volume of total listings on the market, you can see we're down almost 25% our long-term averages. So this is the reason we're seeing such a drop, such a rapid price increase. at the moment because there's just not enough stock to satisfy demand. And it doesn't look like that is going to continue with the lockdown and continued restrictions. I don't think we're going to have a really booming spring season like we normally have. So it's going to continue to be a challenging time for buyers to get into the market. Some of the other stats to look at is days on market. So this is the time period from when a property is listed to when it's sold. So the national average at the moment is down to 29 days, down from 49 days. So you can see a significant drop in the number of days on market, which indicates very high demand right across all the capital cities. So it's taking a lot less time to sell your property. So basically it's saying it's a seller's market, not a buyer's market. An interesting stat on this next one, Terry, which was done by Eliza Owen from CoreLogic. She looked at the dwelling sales ratio to new listings. So where you've got a ratio of 1 to 1, it shows that buyer demand is equal to seller supply. But when we have a ratio above 1, it basically indicates we've got very strong selling conditions, and it's definitely a buyer's market. If it's under 1, then it's a buyer's market. So you can see here above, where's my cursor? Above the 1 line, you can see here that most of the capital cities have been quite strong. So Sydney is about 1.4, almost heading up to 1.5. And a lot of the other capital cities are trending up that way. So an interesting stat at the moment.
I think Adelaide's the one that's got a ratio of 2. Which
that's right. It's jumped right up there.
If the ratio is 1, I think it means that vendors are supplying new properties to the market at the same rate that people are buying them. So that's a balanced market. Once the ratio gets above 1, it means that there's not enough new properties coming along.
Exactly.
So when you look at that graph and understand what it means, it starts to provide an understanding of why prices are rising so fast. We've got lots of demand. Vendors aren't coming to the party as much as the market would like it to.
So Terry, I'm sure we're going to have, I haven't looked at the Q&A box, but I'm sure we're going to have lots of questions on how long will this boom last? I get asked this every day. Surely it's got to slow down. Surely it can't last forever. Well, 8% rises in a market on a quarterly basis is unsustainable. But Terry, take us through some of your 16 reasons as to why this boom is still going.
Yeah, well, I think these are my 16 dot points of the reasons why we have this boom, and some of it articulates the various forces that are feeding into this upcycle, and some of them, I believe, are forces that are only just starting to be felt, and some are yet to come. And that's why I think that this upcycle has some longevity. There's been quite a lot of comment in media to the effect that prices are rising despite the pandemic. But I think if you understand the forces in the market, I would say more correctly, prices are rising because of the pandemic, because we have forces that are pushing the market along that wouldn't be part of it if it wasn't for the pandemic. For example, we've got such a high level of government stimulus measures, both at a federal and state level, that we wouldn't normally have were it not for the economic impacts of the pandemic. We've got expat Australians returning in very, very large numbers and buying real estate. That would not normally be part of the market. It's a response to the pandemic. We've got Australians saving a lot more than they normally would. Because of the restrictions and the border closures, they're unable to spend as they normally would. They're unable to travel as they normally would. So people are saving a lot of money. And that's giving people greater capacity to invest in real estate. And that's what they're doing. They're in lockdown thinking about their life choices, making plans. And that's all part of it. So that the pandemic is causing that demand to come into the market. It's also exacerbated the most powerful trend, as I said, that's impacted on Australian real estate so far this century, and that's the exodus to affordable lifestyle. It's been underway for a while. It wasn't caused by the pandemic, but it's certainly been turbocharged by it. And so that trend where people are buying on the fringes and lifestyle areas, they're buying in regional areas, they're buying in coastal towns, that force has been exacerbated and enhanced by the pandemic. So all of these things are happening because of the pandemic, and it's actually, there was a study published a couple of weeks ago by the major firm KPMG, where their modelling had showed that the price rises that we are currently seeing would be less were it not for the pandemic. The pandemic is actually causing the prices to rise as much as they are. Now, forces that are still to come and be felt fully strongly. I think the increased spending on infrastructure is very significant. It's clear that state and federal governments want us to have an infrastructure-led economic recovery, and they're fast-tracking everything that's anywhere near shovel-ready. And that's an impact that's going to roll out over several years, and it's hugely influential for residential property markets. I think the fact that investors are now coming back into the market, to this point, it's been largely driven by owner-occupier buyers, including first-home buyers. So that's creating more competition. And foreign investors are now starting to come back into the Australian market because Australia is seen as a safe haven, despite the fact that most of us are in lockdown at the moment. So all of that's part of the equation. Economists keep talking about record low interest rates as the prime cause of this event. I don't think it's the prime cause at all. It's one of 16 factors. It certainly doesn't hurt, but it's not the prime mover and shaker in all this. It's really the various responses to the pandemic that's created this very strong upcycle. And I think it's going to roll on because some of these factors are going to be felt not just right now, but next year and beyond.
It's a really good summary, Terry. And I think for those out there listening, to answer the question, how long will these trends continue? Well, COVID has accelerated a lot of the trends that were already in place. And some people are pretty slow to the party. I think the lifestyle factor is always quoted to me. It's a lot of our buyers briefs come from people that say, look, I was thinking about moving up to the Central Coast and now I don't have to commute to Sydney every day. Or I was thinking about moving interstate and now I can take my job with me. So it's definitely freed up the mobility of labour. So I think these trends are long-term trends. I think it's going to be a challenge for commercial property in the cities at some point. I think that the trend will eventually return, but I think it's going to be a new hybrid style of working. So all of these trends, Terry, you've mentioned, I think will continue, I think for several more years. I don't think it's going to be a matter of months. I think it's several more years, and we're going to continue to see the market perform pretty strongly.
I think a point worth making with regard to that, Rich, is that as I said, I think the most powerful force is the exodus to affordable lifestyle. It's not caused by the pandemic. It's a response to technology and people's desire for lifestyle. So it was happening before the pandemic, and now it's happening even more strongly. But LinkedIn, which is as you know, a business networking website, but also a job site, and they published some research based on their figures just a couple of weeks ago, which showed there's been an enormous uplift in the number of employees advertising jobs which offer the flexibility of working remotely as a component of the package. And there was, like in some cases, a doubling of the incidence of that in the last 12 months. And their conclusion was that would tend to suggest that this trend of people moving out of the big cities because they can work remotely is something that's going to continue and be a long-term trend.
That's it, exactly. So let's move now, Terry, to look at next slide here, what I call lockdown blues and clues. So I'd like a bit of a discussion with you just around three things: the impact on listing volumes. Are we going to see any sort of sudden spike in vendors listing their properties? Let's talk about where prices are going to go, and let's also talk about what we've learned from past lockdowns. So Terry, what's your thoughts on where the spring season is going to be? Are we suddenly going to see more vendors come out of the woodwork and list their properties?
Possibly. I think it kind of depends on where the cities are at with lockdowns. I mean, we've seen in Melbourne in particular, vendors withdrawing their properties from auction because the city was in lockdown and feeling it's not a good time to sell. Although the results would suggest it is a very good time to sell. But there is nevertheless that vendor reluctance. We're going to enter spring with almost certainly with Sydney still in lockdown, Melbourne probably also. And so that's going to be putting a bit of a brake on things. Although what we have seen is the word resilient is constantly being applied to the real estate market because of the way it's performed amid all the schmozzle caused by COVID. the industry's adapted wonderfully to the restrictions. So we now have auctions happening online. We also have lenders doing, the interviews with people applying for loans to buy real estate online. In fact, we now have this new phenomenon of digital loans, with some of the secondary lenders competing with the big four and providing very, very fast loans through technology. And Commonwealth Bank this week has made an announcement that it's actually getting on board with that to compete with some of those specialists or digital loan providers. So all of that's in the mix. But despite that, I think there's still going to be vendor reluctance if the cities are in lockdown.
Yeah, I'm talking to a lot of agents right across the city, and every agency is different. Some of them say, yeah, I've got 40 listings. Our agency's got 40 listings coming on. Others saying we've only got a handful. It's going to be up to individual vendors to decide whether to list or not. But I guess the thing in favour of the vendors is that if you are thinking of selling, it's actually not a bad time to sell, because you don't have as much competition from other sellers. The agents can spend one-on-one time with very highly qualified buyers. And the agents are telling me they're getting really, really high quality inquiry. And instead of getting, the neighbours coming through, they're only getting genuine buyers coming through. So I think, if agents can convince vendors that it's actually a good time to sell, then you'll start to see a more moderate number of listings coming through. So I think that they'll genuinely see an increase in the volume of listings coming over September, October, November, but it's certainly not going to be a flood of listings that will suddenly, dissipate the pricing impacts. So, and just moving to that, Terry, if we did have a flood of listings or a rapid increase in listings, you would see price growth start to moderate. I think there's also the affordability point and people's borrowing constraints as well that will come into play in the next 6 months. If the market sort of keeps rising at quarterly rates of 8%, then you will see APRA step in. But I think the market will naturally start to see a moderation for prices, but I certainly don't see prices going backwards. I see prices continuing to rise because there's a massive restriction on supply and very, very high buyer demand and very deep buyer demand. What's your thoughts on pricing going forward, Terry?
Yeah, well, I basically agree with what you've been saying. The current rate of price growth can't continue. I'm doing a table of figures for another reason. I've got it in front of me where we're seeing median prices in some suburbs, and it's happening right around the country in capital cities and in regional areas where there's like an increase of over $100,000 in 3 months. There's one suburb of Adelaide, in fact, where the median prices increased by over $500,000 in the course of 3 months. I mean, that's a bit of an outlier, but it's not uncommon to see median price increases of over 10% in 3 months. That can't continue because it's ultimately unsustainable. But I think we will continue to see prices rising throughout to the end of this year and well into next year. I noticed Commonwealth Bank with its forecast published this week, suggesting they believe that the upcycle with prices rising will continue at least until the end of next year, but at perhaps a slower pace of growth than we're seeing this year.
There's just a question there from Gemma. What does Terry and Rich predict for apartment prices in or near the cities of Sydney and Melbourne for the next 1 to 2 years? Great question. The city fringe apartments have certainly suffered with the absence of students and also overseas migration coming in. But what we're seeing and what I'm predicting as well is that the volume of apartments being built has dramatically fallen over the last couple of years, and the forward projections on build numbers are actually not that high. So I actually think that there is some opportunities to buy well-located apartments that aren't too far from the city. I'd be buying only apartments in lifestyle areas and where there's going to be good demand coming back once all the trends find their way throughout the market. But what are your thoughts on apartment prices, Terry?
Well, we're certainly seeing some significant uplift in, you mentioned lifestyle markets. Well, the Gold Coast is one where it's the strongest the Gold Coast has been for the last 10 years, I think. And we're seeing very strong uplift in median prices for apartments as well as for houses on the Gold Coast. And that's actually quite unusual because the Gold Coast tends to suffer from oversupplying itself with high-rise apartments. But right now we're seeing because it's the sort of place that's being targeted. And I was reading the comments of a number of selling agents just earlier this week on the Gold Coast, to the effect that when Sydney or Melbourne go into lockdown, their phones start ringing, and people are just fed up with the lockdowns in the big cities, and they decided, oh, we're getting out of here. We're going to move to a lifestyle area like the Gold Coast, and so we're seeing big uplift in prices, not just for houses but for apartments on the Gold Coast. So those sorts of markets, I think certainly there's going to be growth. The inner city markets, as long as international borders are closed, there's going to be a problem for sort of the big city, inner city apartment markets.
Okay.
Yeah, but so I agree with you. Target those lifestyle areas.
Right. And last question, Terry, what have we learnt from past lockdowns? I think from my perspective, we've noticed a very rapid and quick rebound. Obviously, property markets have shown resilience and actually rebounded very, very strongly. So the pent-up frustration of buyers certainly comes to the fore. People want to spend money on holidays, they want to buy more things, they want to get out. So the economy rebounds. It's just going to depend on how quickly, whether it's a really slow, painful process coming out of these lockdowns, or whether we're going to be able to get vaccination rates up to be able to come out of it faster. But what can we take from past lockdowns, do you think, Terry, in terms of the impact on the property market?
I think Melbourne's a great case study, and we're going to be talking a bit more about Melbourne in just a little while. But Melbourne's been more impacted, or more often impacted by lockdowns than anywhere else. And there was a short-term negative impact, but the speed and strength of the recovery has been extraordinary. And so, in the year to date, the first 7 months of 2021, median house price for Melbourne's up almost 14%. And there's also been growth in median apartment prices around 6 or 7% in the year to date. So that indicates that by the end of the year, if that rate of growth continues, it's going to be, around about 20% growth in a market that's been constantly afflicted by restrictions. So I think that provides a good case study of just how, I think the word that's appropriate more than resilient is defiant.
That's a good word. I like that. Exactly.
And I also think, as I mentioned earlier, that the market has adapted wonderfully to the situation. They've found ways to operate using technology, online inspections, online auctions, loan interviews being conducted through technology. The more it happens, the more the industry adapts. And so I think perhaps that's a factor that needs to be factored into our predictions as well.
Excellent. Awesome. Well, I want to move to, Terry, some lockdown buying tips. And I'll just pick up from here, which is from a buying angle. So one thing with talking about adapting, it has to be one-on-one appointments with agents. Often there's a 5, 10 or 15-minute window. So a lot of buyers are learning they've got to book in early. Otherwise, you're going to miss out. There might only be 10 or 12 slots available. So definitely book in early in the week. The other thing is, if you want to buy well, try and build relationships with as many agents, and particularly local agents, to get access to the off-market stock, because many agents will do an off-market campaign before they go to market. And if they get the right price, then they'll sell without too much competition. I've written there, don't buy sight unseen. And what I mean by that is, yes, you can do a virtual inspection, but you do have to have someone who's qualified to go and look at the property on your behalf. You can buy remotely, but don't buy it just through the agent. Get someone independent of the agent, whether you use someone like us as buyer's agents or someone else you trust. It's very important to make sure you look over the back fence, and there might be an electricity stanchion or a druggie gang over the fence. You just don't know. So you've got to make sure that you check all the parameters and get the perspective on the property before you sign on that dotted line on a contract. The other thing to do is try to create multiple buying options. Don't get your heart set on one property, even in a hot market. Try and have multiple buying opportunities so you can negotiate well. And also this one, don't overpay. It's very important in a rising market. Yes, you've got to pay the market value, but some people are paying silly prices, really stupid prices. And I think you've just got to be careful to watch your budget and not overextend yourself. And on an emotional point, there's a lot of frustrated buyers out there. So people get pretty fatigued at looking at properties every week and missing out. But the week that you give up might be the week that a good property comes. So it's important to have that element of persistence when you're looking for a property too.
Rich, the one buying tip that I would add to those that you've listed is it's a great argument for engaging a buyer's agent right now. I think now more than ever before, buyers of all sorts should be engaging a good and trusted buyer's agent to, someone who's got the experience in how to operate in a market like this, because I think it's money very well spent at the moment.
Thanks, Terry. Well, just on that, the very quick overview of what we do as buyer's agents. We take our buyers through this 7-step process, and even if you do it yourself, you should be doing these 7 steps as well, which is firstly identify what your strategy is, identify the kind of property that's going to be suitable for your goals, whether it's a high growth, high cash flow, the right location. Then you've got to research it. And Terry, your research reports are excellent. So we use those as well as many others for our clients. Provide that background information, so you've got some benchmark reports to know what you're buying. Then you've got to start shortlisting and searching, and that's a never-ending process. And it's not just about buying the first one you see, but doing a lot of comparison work. Then when you've found the right property, as I said, you've got to look at recent and relevant comparable sales. And when I say recent, you've got to really look back within the last 6 weeks. Going back 3 months is almost too long. Really, you've got to look in the last 6 weeks. Then you've got to complete your due diligence, negotiate, complete any other due diligence that's needed, and exchange contracts. And then our last step in our process is also a pre-settlement inspection and finding a property manager if you're an investor in the process. Also, just on that, buying remotely, we've got buyers agents in all Melbourne, in Brisbane, Newcastle, and throughout Sydney. So it's good to tap into someone who's got local knowledge. And we'll be talking with Amanda Jones in our team in just a minute, who's based in Melbourne, about where she sees the market at. So these, I guess, the couple of key benefits of using a buyer's agent is just helping you with those 7 steps. But it's really about having someone on your side, who's in your corner, who's helping you to do all of the various steps, and you're outsourcing that and buying with a lot more confidence. So that's the work that I'm sure a lot of you are familiar with, or some of you may have already used this as well. In terms of the cost or the fee, we work on a fixed fee basis. The sliding scale ranges between 1.5% to 2%, but it's a fixed fee per price band. Happy to send that to you if you're interested in our service. You pay an upfront engagement fee of between $3,000 to $5,000, and then you're on your way working with one of my team one-on-one, and they'll be giving you that one-on-one attention, giving you a personalized strategy, helping you to fast track that search, because I can tell you a lot of buyers that try to do it on their own end up taking 6 to 12 months, in which case the market might have moved another 50 or 100 grand, depending on what market you're looking in. So it's definitely worth the investment, and it's a tax deductible cost as well. So what I'd like to do now, Amanda, if you could come off, where is it, off your mute, and also come off your, put your video on, would be great. There we are. I'd like to introduce you to Amanda. Welcome, Amanda.
Hi, Rich. Hi, Terry. Hi, everyone. I hope everyone's having a great day.
Fantastic. So, Amanda, I might just ask you, actually, I'll just go off stop sharing for a second, and we go back to the full screen. I've got a couple of questions for you, if I may. Tell us about the Melbourne market. What's the mood of the Melbourne property market at the moment?
Well, you keep on using one word that's really good, and it's resilient. And it's a really resilient market down here, but it's extremely optimistic too. So it's an optimistic, resilient market. And the other word is adapting. And there's lots of opportunities, and it's going to be thriving. So it's a great market at the moment.
Okay. I mean, I think some of the figures show that it's got a bit more potential to grow than some of the other capital cities, because it's been held back by so many consistent lockdowns and protracted lockdowns. But what's driving, do you think, some of the rebound in the Melbourne market?
So with the short, sharp lockdowns that we're actually having in Melbourne at the moment because of the pandemic, what is driving the market is, as soon as we open up and we start to be able to get the open for inspections, there is so many people out on the weekends. So we're seeing numbers that we haven't seen before at opens, and we're seeing numbers that we haven't seen at auctions. So people have that fear of missing out as well. So that is what's driving the market. It's also lifestyle. So we've had a week this week where we're back in lockdown, and the kids aren't allowed to play at the local parks anymore. So that is what is driving the market too. People want land. They want houses. We're going back to an era of 30, 40 years ago, like my parents, where that block is so important. And we're going back to strip shopping. You know, you go to your local shops. You're not going to the big supermarkets anymore. So everyone's staying very localized, and they're wanting the bigger blocks, and they're seeing that for the capital growth of their family.
And talking of capital growth, Amanda, can I just pick your brain here? What sort of general areas or suburbs would you recommend for both home buyers and investors that want to make some good gains in the next 3 to 5 years?
You hate me saying the southeast all the time, or the Bayside suburbs, but I really love Frankston South. I love Frankston South because the median house price is only around about $800,000, and it's actually a burrowing suburb to Mount Eliza. And Mount Eliza has multi-million-dollar properties, and they also have cheaper properties. And the land size is huge. The blocks are huge. So for capital growth, it's amazing. For lifestyle, for shops, for restaurants, for the infrastructure, the train line from Melbourne to Frankston is absolutely amazing. And they've just done major works on the freeways out there. But school zones, water, schools, land is gold.
Okay, I like the way you sort of summarize it. Water, schools, what was the other? Water, schools, and land. Is that what you're saying?
Yep,
Okay.
it's just gold.
What do you think of that scenario, Terry? You like that analogy?
I do. I really like the fact that you had that focus on the Frankston area, which is a market that I've been talking about for quite a few years, and a lot of people have a reaction to Frankston. Although I know South Frankston is a different market. That's the more there's North Frankston, there's Frankston, and there's South Frankston. You're talking about the more upmarket, prestigious part of that market. But I've always thought it's a great part of Melbourne, offering a high level of affordability on the bay with good infrastructure, good transport links back to the city. And it's the sort of market that you would expect to thrive in the current circumstances.
Very true.
And Amanda, probably if you had only $750 to invest, or you had $1 million to invest, if you had sort of two different briefs, tell us sort of roughly how you'd guide a client with those two different budgets. Are they going to be the same area, different areas? If you had $750, or then a bit more to spend?
It's really interesting, Melbourne, because it's got many different pockets that you can actually buy for $750,000 or not. But Frankston South, Langwarrin is another fantastic area. Land size is absolutely huge. What you get for your house, like a 4 to 5 bedroom house, the houses are huge. I was talking to an agent last week down in Frankston and Langwarrin. They're getting up to 50 applicants for properties out that way. So
it's funny you mentioned Langwarrin, because you remember I did that show Buying Blind about 3 years ago.
Yep.
I actually bought a house for one of the contestants on that show in Langwarrin. So
yeah,
and I know what you mean about the land. It's got a really nice, spacious feel about it.
And it's got a little bit of country, and it's a bit close to the beach. But there's also areas like Watsonia as well. Watsonia North. The blocks out there are really big. And now, if you can get in now for around about $750,000, amazing for the future. If you're wanting to buy something to just for your super, the developers haven't gone in there yet. So once the developers go in there and they realize the opportunities there, there's going to be great value in probably 5 years, 5 to 7 years, if you hold on to it. Apartments, you can't go past apartments anywhere from Mordialloc down to Frankston. There's some great opportunities around St Kilda at the moment, but it is a market that people are moving out from. So they're moving more down to the southeastern suburbs, down towards the bay.
A lot of people have been a bit scared about the apartment market because of Docklands or the inner city sort of glut there was at one stage. But what's your view on sort of the suburbs closer to the city or in the city? Is there opportunities to buy well for apartments at the moment?
Brooklyn's a really good area, which is around about 13 k's just from the city, and it's a little neighbouring suburb of Yarraville. You can get really good 2 to 3 bedroom apartments for around about $500,000, which is absolutely fantastic. But within the city of Melbourne, the CBD, there is a high vacancy rate at the moment. People have been moving out and investors are trying to sell. It's a good time to buy because once borders do open and we do start getting that immigration back and the students back to university, it's going to be very lucrative for somebody who bought now in this market. I would also suggest too, if you're worried about apartments in the city or overdevelopment of apartments, there's great opportunity still for, I've got a client at the moment, and I'm actually looking at smaller apartment complexes. And I've come across brilliant ones with have under 40 apartments in them or under 10 apartments in them. So if you really look, you can get some great value and they're not cookie cutter ones. So you have to choose something that's got a little bit of personality for the future, because that's future proof.
Excellent. And just overall, what's the rental market like in the Melbourne market? Is there strong demand? Is there high vacancy, low vacancy?
Again, it's area by area. So in some of the more affluent areas like Malvern, Armidale, again, Brighton, Sandringham, the rent, Brighton, Blackrock, Beaumaris, the rental market, the demand is very high, and you've actually got people that are actually trying to outbid other tenants to get properties. So it's very, very competitive in some areas of Melbourne. And then, as I was talking about Frankston South, you can have up to 50 applicants on one property because everybody is moving out to that more lifestyle based life that they're wanting, and they are working from home and they do want to be near transport if they do need to commute into the city, if they do have to do their 2 or 3 days a week work.
Excellent. So I just want to take you, if I can, Amanda, just to talk us through this one example property that you bought for a client recently in Cheltenham. Tell us how that transpired and why you ended up recommending that particular area for the client.
Okay, that particular area, Cheltenham, is very, very close to a shopping centre called Southland. And there is already a Cheltenham railway station, but they put a railway station at Southland Shopping Centre. So you've got 2 railways in the space of probably 700 or 800 metres. It's not very far. It's also in a school zone. The schools around that are state, and they're also very exclusive private schools in Mentone, which Cheltenham just burrows onto. This particular buy, I bought just before we went into a lockdown, and the buyers were very scared that the market was going to drop at the time. And I said to them, it's not going to drop. We're actually going to see an acceleration because there are some areas of Melbourne that you can see daily increases of up to about $800 a day. If you were to actually look at the whole data of where the property prices are actually going. So they needed to be close to kindergarten. They needed to be close to schools. They wanted to be close to major shopping centres. They also wanted to be close to a freeway so her husband could commute into the city. The land size was great for them. They wanted a backyard, 4-bedroom, 2-bath, 2-car, just a brilliant little area, Cheltenham.
Brilliant. Wonderful. Thank you so much, Amanda. Amanda, stay on the line because I would like to just go through some Q&A if I can with you now. I'm just going to pull up, most of it's in the chat, but just quickly jump into the Q&A. Terry, can you answer this question for Lucy? Just a quick overview on the WA market over the next 3 to 6 months. Someone who's thinking of selling, what would you say to them in the WA market?
Well, assuming that we're talking about Perth, the Perth market is definitely the strongest that it's been for more than 6 or 7 years. Perth last boomed when the resources investment boom was on. That came to a halt about 2013. So it's been a lean time for Perth, but definitely on the way back very strongly. You've seen a massive uplift in sales activity. over the last 6 to 9 months in Perth. Prices are responding. Vacancies, which at one point were 4 or 5% in Perth, are now down below 1%. So if the person asking the question is in a position where they need to sell or want to sell, and now would be a good strong market to sell into. I would also say that if they don't actually need to sell, if they perhaps waited 6 or 12 months, they would probably get an even bigger price for their property, because there's no doubt that Perth prices are now on the ascendancy. So
yeah, cool.
Yeah.
Okay. A lot of people asked, I'll just summarise a couple of questions in one. People asking about the Brisbane outlook and the impact of the Olympic Games win. What's your view, Terry, about how much that's going to improve the property market in Brisbane over the next 5 to 10 years?
Look, Brisbane is a market in the ascendancy already at last, because Brisbane hasn't really done much for 10 years. It's been chugging along. But the affordability comparison, the population data, the infrastructure spend is elevated. And it also fits that exodus to affordable lifestyle. Some people are moving to smaller cities, not just to the country. And then the Olympic announcement came along to take that to a whole other level. And I think the impact from the Olympics is actually going to be felt before the event, not after the event. And I think there's experience and other major events like the Gold Coast Commonwealth Games that bears that out. So I think Brisbane's going to be a great place to own real estate. I'd certainly be looking to buy there now and expecting growth for the next 10 years to be a lot better than the last 10 years.
Great. Amanda, I've got a question for you. Thoughts on Keilor Downs, Taylors Lake area? What's your perspective on those markets, Keilor Downs, Taylors Lakes?
Fantastic areas. I still probably like Melton a little bit more than Taylors Lakes, and Melton again's just got fantastic land size, and people seem to forget, for investors it's a really good area too, because up to 30% of the people that live in Melton are actually renters, so it's really good for investment. Taylors Lakes, close to the city, great getting into the city, and transportation and everything's on the increase over that way. Great little market. Again, it depends, there's a lot of new builds over there too, so it just depends on if you're after the new build or if you're after something that's existing. And there can be a bit of a price difference in the two. Okay,
very good. Terry, question about Canberra apartments. Is that something you'd put your own money into, or would you look elsewhere?
No, I mean, I would always ask myself the question, and I urge investors to ask themselves this question when thinking of buying a product in a certain area: is this the absolute best investment I can make in all of Australia right now? And I don't think Canberra apartments would be the yes answer to that. I think Canberra is a market that's worthy of consideration, but probably not the apartment market. I'd be looking for houses on land if I was investing in Canberra. I'd also be considering just popping over the border into an area like Queanbeyan, which is actually technically New South Wales, but it's part of the Canberra market. It's got good momentum and it's more affordable.
Yep. Okay. I guess someone's just made a comment about land tax. Yeah, well, look, I mean, there's land tax thresholds that are different in every state. My sort of comments around, is it higher in Victoria? Yes, it's high in look, all the capital cities and all the states, but talk to your tax advisor on how to minimise that. But one strategy is to buy different property in different states. But obviously make sure you buy in the right area, in the right location to get the capital growth. But if you're paying land tax, it's a good thing because the value of your land's going up. Someone's asking about Townsville, Terry. What's your view of the Townsville market going forward?
Yeah, I noticed a number of people out there watching and listening asking about Townsville. It's definitely coming into a period of strength. Townsville's been in the doldrums for the past 5 or 6 years, but it's now starting to rise. We're seeing it very strongly in the sales activity numbers. I've just been actually analysing those figures, and Townsville's on the rise. We're starting to see it translate into some price growth. There's a big infrastructure spend underway in Townsville and more to come. We're expecting some similar impact to what we've seen on the Sunshine Coast market, where infrastructure spend completely revolutionised the local economy, and that impacted very positively on property. the big proviso for markets like Townsville is the insurance premiums, which are much higher than anywhere else because it's in that zone where they get whacked by major weather events from time to time. So keep that in mind.
Okay. Tony's asked a question about suggestions for lifestyle markets other than the Gold Coast. I'll kick off with that one. Some other areas is the Central Coast, just north of Sydney, or Wollongong. We've seen quite a strong demand for people. Actually, we've got one client coming out of Canberra going to the Wollongong, northern beaches of Wollongong. The other market is Newcastle. We've seen a strong exodus of, I've even had good friends that have moved up there and absolutely love it. Great beaches, you've got the light rail going into the city, very, very diverse employment opportunities. So we're seeing quite a few people pick up that trend of just being within an hour and a half, 2 hours of Sydney, but getting that lifestyle appeal that they're looking for. What would you say, Amanda? Any particular lifestyle markets surrounding Melbourne or even in Melbourne itself that you'd recommend?
Again, it's down towards Peninsula, as Terry was talking about, and he was right on the money talking about the Yarra Ranges as well, that it's just going crazy around Callista and all of that area. It's just absolutely amazing. So the further out of Melbourne people can get, the better, instead of going to the regional areas, because I don't want to go to the regional areas. But lifestyle, it's all about families. And I think we are, as I said before, we're stepping back a couple of generations, and people are wanting the freedom of that the house and land package that our parents actually enjoyed.
Okay. Terry, someone's asked a question: is it a good time to sell in regional areas, or is there more upward trend expected? What do you think? How would you answer that one?
Sorry, is it a good time to sell, or do we expect?
Is it a good time to sell in a regional area, or is it still more upward trend expected?
Oh, look, I think the trend's going to continue. It's been underway for a while. It's kind of been misrepresented, as things often are in media, as a response to COVID. The trend of people moving to the regional areas has been underway for a number of years. Sydney's been losing population to internal migration for the last 10 years, and Melbourne for the last 4. And what's driving it is technology and the ability to work remotely, and the pursuit of a lifestyle at a more affordable price than the big inner city area. So I think it's going to continue. So if I own regional property in good regional areas, and I do stress good because I think some investors are buying rather foolishly in locations that don't have the credentials for long-term growth. But if I own real estate in a good, strong regional centre, I'd be keeping it, because it's going to continue to grow in value. This trend has got legs. It's going to continue.
Another one for you, Terry. Any views on the central Tasmania market in the medium term? Is that somewhere where you put your money in central Tassie, or would you consider other markets better?
I would consider other markets simply because central Tasmania and all parts of Tasmania, including Hobart and Launceston, have had 3 or 4 years of fantastic growth. Still growing. But I guess the question I'd ask myself is, obviously I wish I bought in these places 3 or 4 years ago. Where can I buy that's got the potential to do what Tasmania's already done? So I'd be looking elsewhere simply for that factor. But I think Tasmania's, the Tasmanian market has risen in concert with the improvement in the Tasmanian economy. I think local economies and property markets are interlinked, and it's not a coincidence that Hobart and Tasmania has risen at a time when Tasmania has risen up the rankings. It used to be ranked last in the CommSec State of the States report. Now it's number one economy in the country, and has been for the last 4 or 5 quarterly surveys. So very strong market, but if I was considering buying there, I'd be perhaps looking elsewhere that's earlier in the cycle.
Very good. Someone says, there's been a lot of discussion on the over 500,000 mark. I'm wondering about thoughts on more affordable markets for standalone houses. I'll kick off on that one, Terry, and I'll get you to jump in after me. But we're often buying a lot of properties in the outskirts of like Maitland, Cessnock, outskirts of Newcastle for that sort of price, and also in the southwest areas around Brisbane. So we're buying in the Logan Shire and also the northern suburbs of Brisbane, and getting some good returns. So Brisbane, we're typically getting close to a 5% yield on a freestanding house, a 4-bedroom house. In around the sort of Maitland, Cessnock, around about a 4.5 to almost 5% yield in those areas. Any other markets you'd recommend, Terry?
Yeah, you mentioned Logan. I think Ipswich City is a special at the moment. It's the uplift in sales activity that we're seeing in the numbers in the suburbs of Ipswich City is extraordinary, probably more so than anywhere else in Australia right now. So big price growth is coming to that market. It's the most affordable part of the Brisbane market. There's lots of big employment nodes out there. There's good infrastructure. So I think that would be a place to target if you're in those you're looking to buy around, say, 300,000. You mentioned the Hunter Valley. I think that's a great place to consider for affordability, for lifestyle, infrastructure-driven economies, definitely. Adelaide, I think Adelaide's very underrated and offers a number of opportunities to buy solid real estate in those lower price ranges with really good rental yields on offer. It's very hard to find a postcode anywhere in Adelaide with a vacancy rate above 1%. It's a great place to be a landlord at the moment.
Very good. I'll just stop the share over there. I think we're just about out of time, but I'll maybe just ask one more question. Sorry guys, there's so many questions I can't answer them all. I'll just pick one around. Someone's asked about Cronulla. Terry, what's your views on Cronulla in Sydney?
Oh, look, that's a bit of a leading question. You know, I'm a big fan of that part of the Sydney market. And I know, in fact, I think it was you that first alerted me to the potential. We took a deeper look at the Sutherland Shire market because you suggested it, I think, Rich, and we found that, great potential there. In Sydney terms, wonderful value for money, affordable by Sydney standards, access to great lifestyle, water, national parks, and I think it's pretty good buying for people who, just a little bit above the $1 million, but well under what you're paying in some of those northern beaches suburbs or the eastern suburbs of Sydney.
Wonderful. Look, we're going to have to wrap it up there. We're just out of time. I want to say thank you so much, Terry, for hosting with me today. Always appreciate your insights. And Amanda, thank you for your contribution on the Melbourne market. For anyone watching out there, we will be sending around a recording of this webinar. And if you've got any other questions you have or would like to get in touch to inquire about our services or Terry's reports, please feel free to reach out. But I'd just like to say thank you, and we'll bring the webinar to a close. But thanks for watching. Bye for now.
Bye.
Bye.